Eric here again. If you've been actively trading, the last couple of weeks have been pretty rough because most people are on a bullish outlook and it has been pretty bearish. With that being said, today was the day that I finally did something about this 105 put that I sold in ARKK. It's technically the 104.96 put, and I collected $3. I opened it back here on this vertical line on the 22nd of April, and it was going just great for, the first roughly week or so. It was pretty sideways, and then all of a sudden right here on the 3rd of May, it has been all downhill. And today looks like it'll finally be a green candle, but it's still gonna be likely below yesterday's close. So that's a pretty rough run, but frankly the whole market has been like this, especially like tech stocks and growth stocks. They are really taking a correction right now. And frankly, it makes sense. I mean, we've had, if you zoom out here, we've had quite the bull run from the March, COVID crash low. And this ARKK went from 32 bucks all the way up to 160. So we're due for a bigger correction. That's probably an understatement. And as you can see here, I've kind of projected in this ABC correction, and that comes from, this is an Elliott wave 5 move up. And in theory, when you get to the 5th wave high, you correct this whole run here. And so if you do that, this C down here is the 0.618 correction. And so far here, it is approaching the 0.5 correction. So it could hold up here, it could just be ABC and then stop here. But typically these larger 5-wave corrections, it's very common to come down to this, 0.618 or 61.8% retracement, and that would be way down here at 81 bucks, give or take. And in my opinion, that is totally within reason at this point. I mean, you could argue that this is a 1 down, 2 up, and then you're going to have a third wave, which is the most powerful wave. It's going to come down into here somewhere, like 87, let's say. Then it'll bounce up the 4th wave, and then the 5th wave down will finally bottom out around 81 bucks, give or take. And then if you break it down to a smaller wave count, I'm going to delete this. If this is 1, 2, inside this 3rd wave down, you'd have 1, 2, 3, and then maybe it's going to bounce up into here. It might kind of stabilize around the 103 mark, give or take, kind of hover around here, and then eventually complete the 5th wave, minor wave down to, around $81. But whatever, that's technical analysis. All that crap is a major, huge grain of salt. In my opinion, even though I do the technical analysis, it's basically 50-50 if you're going to be right or wrong, especially in a shorter term, like a week. It's basically 50-50. You might gain a slight edge if you're really good at technical analysis. But yeah, no one really knows, so do your own research and tread lightly. Anyways, moving on to the trade I did today, I finally sold a call against this put, and I sold the 110.96 call against this, and I collected like a $3.50 credit. So that now turns this naked put into a strangle where it is right here between roughly 110 and 105 is where I want the price to ultimately go. And by selling that, it pushes out my break even. Instead of $3 here, I collected $3.50 on top of that. So now my total credit is $6.50. So if I'm at 105 and I got $6.50, that pushes me down to $98.50, which is roughly in here. That's my break even on the trade at expiration. Whereas previously my break even was just 105 minus 3, which was, 102. So now I'm down here at 98.5, which is below the current stock price of 101, which is good. And if we head over here to Tastyworks, so I initially had the 104.96 put here, or 105. I sold that. I collected $3. Right now it's at $8.80. So I am down $5.80 right now, or 580 bucks. So to offset that, I sold this 110.96 call. And the great thing about Tastyworks is right here with both of these selected, it requires $2,031 of buying power effect. Well, if I unselect this call, look at that, it actually goes up. It requires $2,041 of buying power. So to add this call, which collects more money, i.e. gives my break even a better strike point, when I click that, my buying power required actually goes down a few bucks. So essentially, when you have a naked put and you feel like you want to sell a call against it, at least using Tastyworks, when you add this short call to turn it into a strangle, it requires no buying power. And if anything, it'll actually increase your buying power by like a couple bucks, which is great. And it really makes sense because you collect more credit, right? So I was down 580 bucks on this or whatever. So now I collect $3 more. So that means I'm only down like 280 bucks on it now, right? So I get more credit. I'm now in a strangle. You know, I want the price action to fall within this would be the ideal situation between 104.96 and 110.96. But now you can see this green shaded area, the break evens get pushed way out here to 120 and then down here to 92.96. Of course, that's if you're going to open this trade right now. That's not the case with me. I already had this position open. So my break evens are more like, what was it, 98. You know, I'm in here at 98 something, 98.50. And then going higher, 110 plus 650 is like, you know, 117.50 or whatever up here. So that's where my new break evens are. Whereas before, if I deleted this, I only collected $3. You know, my break even would be like right here where the current price is, 102, all the way out here to like 98.50, which is great because that means the current price is above my break even, which is exactly what I want right now. And yeah, so now I'm just waiting and kind of hoping that this will bounce in my favor. If it keeps going down, I could roll this down again and turn this into a straddle. I don't really want to do that, but if I have to, that's what I will do. And then obviously eventually I will need to decide if I want to take a loss on this or not. So I think that covers everything. If you have any questions, let me know in the comments. Otherwise, I'll see you in the next video.